Most traders are looking at Tesla right now and thinking nothing is happening. That's the mistake. Because right now Tesla is sitting at a level where one wrong decision can cost you a lot of money. The stock is trading around $352. 1 year ago it was near 214. Before that it touched almost 500. This is not just a car company anymore. This is AI, robotics, energy and software all combined into one stock. And in just a few days Tesla is about to report earnings. That single event can move this stock 10 to 15% overnight. So in this video, I'm going to break down exactly what's happening behind the scenes, what the charts are telling us, and how you should approach this as a trader. First, let's quickly understand something important. Tesla is not like gold or Forex. This is a stock. Stocks trade during specific hours from 9:30 a.m. to 4 p.m. New York time. You're buying shares, not lots. And unlike gold, stocks move heavily on earnings. Every quarter, one report can completely change direction. That's exactly what makes Tesla so interesting right now. Now let's zoom out and look at the bigger picture. On the monthly chart, Tesla has been extremely volatile. In 2024, it rallied hard. In 2025, it dropped sharply. Then it bounced again. In December 2025, Tesla made a major high near $498. And since then, it has pulled back to around 352. That's a significant drop. But here's the key point. The long-term structure is still not fully broken. However, there is a clear distribution zone between 430 and 500. Every time price moves into that area, it gets rejected. That tells us institutions have been selling there. Now moving to the weekly chart. This is where things start to shift. After that high near 498, price started forming lower highs. Each push-up is weaker than the last one. That's a classic sign of bearish pressure. At the same time, we are heading into earnings. And this is where stocks behave very differently. One strong earnings report can completely flip this structure. One weak report can accelerate the downside. So right now the chart is bearish, but the event risk is extremely high. On the daily chart, everything becomes clearer. Tesla is trading around 352. There are two major zones you need to focus on. The first one is resistance between 370 and 383. Every time price moves into this area, it gets rejected. That's where sellers are active. The second is support between 330 and 340. This is where price previously bounced. Right now price is stuck between these zones. That means the market is in a range. And this is where most traders lose money because they trade in the middle instead of waiting for the edges. Now let's go deeper. On the 4-hour chart, Tesla is clearly consolidating between 340 and 370. Price is moving up and down inside this range. This is not random. This is where liquidity is being built. Above the highs, traders are placing breakout buys. Below the lows, traders are placing sell stops. The market uses this to trap both sides before making a real move. On the 1-hour chart, we can see short-term weakness. Price is forming lower highs, momentum is slowing down, and right now Tesla is sitting right in the middle of the range. This is not a good place to enter a trade. Professional traders wait. They wait for price to move into a key area, either near resistance or near support. That's where the real opportunities are. Now let's talk about actual setups. There are two scenarios. The first one is a short setup. If price moves back into the 368 to 370 area and shows rejection, that becomes a high probability short. Stop loss above 383. Targets back down toward 340. Then lower if momentum continues. This setup works best before earnings or if the market stays weak. The second setup is a conditional long. This only comes into play after earnings. If Tesla reports strong numbers, especially around AI, Robotaxi, or energy growth, then we look for a dip into 340 to 345. That's where buyers may step in. From there, price can move back toward 400 or even higher. But this setup depends completely on the earnings outcome. Now let's talk about fundamentals, because Tesla is not just a chart, it's a story. And right now that story is divided. The automotive side is struggling, deliveries missed expectations, competition is increasing globally, margins are shrinking. At the same time, Tesla is pushing aggressively into AI and robotics. Robotaxi is already being tested. Full self-driving adoption is growing. The energy business is expanding and becoming more profitable. And then there's Optimus, the humanoid robot, that's a long-term wildcard. So you have one part of the business slowing down and another part just getting started. That's why the market is uncertain. Now let's break this into scenarios. If earnings disappoint, the probability is that Tesla drops toward 320 or even 300. That's where liquidity sits below. If earnings surprise to the upside, especially with strong forward guidance, the stock can move toward 400 and possibly test higher zones. And if results come in neutral, the stock will likely continue moving sideways in this range. So, what should you do as a trader? If you're looking to short, wait for price near resistance. If you're looking to go long, wait for confirmation after earnings. And most importantly, avoid holding positions right before earnings unless you fully understand the risk. Because this is where most traders get caught off guard. So here's the big picture. Tesla is not boring right now. It's setting up. The range you see is not inactivity, it's preparation. And the move that comes out of this will likely be fast and aggressive. Now I want your opinion. Do you think Tesla drops first after earnings or breaks higher? Let me know in the comments, and if you want more breakdowns like this, clear, no hype, just logic, subscribe to the channel. Because here we don't guess, we read the market.